Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Monday, July 17th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, NKLA. And depending on your strategy going into this one is going to kind of determine how you feel about the weekend. What do I mean? Well, if you're some sort of day trader, flipper, scalper, whatever you want to call yourself, and you bought, somewhere right around there, or maybe you bought the dip and thought the dip was over right there, and your goal was to buy and sell within 5 minutes. From that perspective, the chart looks absolutely terrible, as this was a nasty, nasty move in the downwards direction. With that being said, if you do care about the bigger picture point of view, and this is where I need to go back to this green line here that I talked about in yesterday's video, which was that key pullback area right there around $1.95. You can see the price, actually the power of charts, never hit it exactly, but got very close. But the key thing here from the bigger picture point of view is it did hold. So why is that significant? Why is that important from the bigger picture point of view? Well, now assuming it continues to hold, you'd have a set of lows right there. Whereas the previous set? Down here. And if you envision those as stair steps, again, emphasis on the big picture point of view, you'd still have stair steps progressing in the upwards direction. Once again, I realize if you're some sort of day trader that bought right there, you don't care about these stair steps. So that's why I'm trying to emphasize both angles, from a day trading angle and then from somebody that cares about more so the bigger picture point of view. So like I said, no doubt about it, today individually, brutal day. But looking at the past multiple days, you can see the trend does still have the opportunity to continue to build those upward stair steps. Next one here, GOEV, very nice move today. And as I speak right now, during the last 30 minutes, you can see good, solid final 30 minutes here. And now it's just a question of, can this, momentum lead into a breakout going into next week? So let's just map out the pattern here that you got to think a lot of people are watching. So first key part of this pattern right up there at 74 cents. Nothing fancy or complicated behind that, other than the fact of that's just simply where the party finally stopped earlier on in the day. So that is the top part of the pattern. Bottom part of the pattern, right down here, you have this area of support, that trend line. So we'll change that to green to represent more so the bullish dynamic of things, and then maybe to make the pattern a little bit easier to see, let's keep it all one color. So we have our resistance, we have our support, we have the explosion right there. And then if you golfers out there, I'll make it a little bit more visual. Let's put our golf hole down here. This would be known as a bull pennant pattern. So if you like bull pennants and if you like penny stocks, I'd certainly keep an eye on it. Next one, KSCP, very nice move, nice trend, and we have once again a familiar pattern that we just talked about. So I'm going to go a little bit quicker through this one because you just heard me talk about it. So I want to respect your time. So there's our resistance, there's our support. Just because I can't help myself, let's change the support to the level or to the color of green to represent that support. And then to keep it all one color again, we have our resistance, we have our support. That was a terrible line, but we have our nice move upwards. We have our golf hole down here. So we have ourselves another bull pennant pattern. The biggest difference here would be this one is not a penny stock. It's up over that dollar mark. So if you maybe don't prefer penny stocks, but you like stocks down below $5 and you like bull pennants, definitely keep an eye on it. Next one, PRFX, and there's no doubt about it, a pretty ugly looking chart right now. But for you longer time viewers, you've heard me say it many times, there can be opportunity in the ugly, and we'll talk about that. But let's just set up a little context. Very, very nice start to the day. Got all the way up there, and I think that there are some poor souls that bought right there, right before the price really came down in a big way. But I would not say that everything is ruined, and the reason for that is the price is still up above that pink line there, which is the 200 period moving average. And history has shown that the last time it got there, nice little move to the upside. Now, let me be very clear, and I wish I could say trading was this easy. If the price does come down to that pink line, is it guaranteed for sure to go and repeat history? It's not. But my point here is it's at least plausible to think that, okay, it's done it before. Maybe that could be some sort of double bottom. So if you like to play these situations where you try to get in around somewhere around here with a tight stop loss, then from a risk reward scenario, you could be looking at a very good situation if you do get some sort of bounce back upwards. But also, if you're not good at managing risk, if you refuse to honor stop losses, you shouldn't even be trading in the first place, but you definitely shouldn't be playing these sorts of scenarios. But yeah, if this one catches your eye as a potential double bottom, if it does come back down to that 200 period moving average, I definitely keep an eye on it. Next one, AMC, brutal move today, what we would call a gap and trap, where the price gapped up here, opened, made a slight move right there, and then from there, just down it went. But to look at maybe the glass is half full, at least the price has now started to go sideways here a little bit. Now, does this mean that for sure guaranteed this downwards moves over? You can't quite say that. In fact, if I draw in the rest of the pattern right there, we'd have the opposite of a bull pennant in this situation. So we have an upside down pennant, put the golf hole up there. This would be a bear pennant. Now, just because something's in a bullish pattern does not mean the price is going to go up. Just like in this situation, because something's bearish does not mean the price is going to go down. I'm just saying that, yeah, this is sideways movement. Yeah, this suggests that maybe this is some sort of bottom finally forming, but you don't want to get overly excited about it. If the price does ultimately break back to the downside some more, the big question mark that I think will be on a lot of people's mind is, can that pink line there hold, which is the 200 period moving average. That's a very important moving average within the world of charts. So you got to think that there's probably a lot of people watching that, currently valued at $4.27. If the price does try to bounce back upwards, first key hurdle that'll need to be cleared right there, the 50 period moving average, purple line at 439. And then if the price can break up through there, you have that next overarching level, which I've talked about before, up around 451. But yeah, overall today, pretty rough day. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then certainly get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely go get signed up for the free class. Next one here is CGC, and think back to that talking point of there can be opportunity in the ugly, and why do we have an ugly situation here? Big gap down, and then even after the gap down, the price just kept dropping and dropping. But what's now occurred is the price is at a very interesting location on the chart. So if I bring this level down and put where the price is at right now at 38 cents, maybe you notice that, well, the last time the price was down here, very, very impressive move. Now, as I started already, I wish it was that easy, but just because the price has bounced from there before does not mean that the price is for sure going to bounce again. But is it at least valid? Is it at least plausible to think, you know what, maybe, just maybe, this is some sort of double bottom that is in the works? So if you like potential double bottom, especially when you have these situations that are very, very ugly, and you like penny stocks, I would definitely say to keep an eye on this one for Monday. Next one, TSLA Tesla, and going into next week, a very, very interesting scenario here. So let me be clear, as I draw this line across here, and let's just call it the 284.50 mark. I'm not trying to impress you. I'm not trying to imply that's some sort of great discovery on my part or that I have a special talent. The exact opposite. You got to think that a lot of people have noticed this level. And I say all that because when a lot of people are watching the same levels and wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movement. So while nothing is guaranteed, is it plausible? Is it valid to think that if the price comes back up to that area, which as you can see here, has essentially been rejected 3 times before, but if it can come up to that area and break up through it, is it possible that that break in of itself could create additional buying pressure just because you're going to have breakout players buying? That is certainly a very valid scenario. So in my mind, that's the most interesting dynamic here, is all about 284.50 on Tesla. Can the price get a break through it? And if so, does that create another round of momentum? If there are any sort of pullbacks, key level to watch right there, purple line 50 period moving average, right now valid at, we'll call it 274.50. Next one here, PLUG. I should have put this one at a different location in the watch list now that I talk about it, because it's going to be the same exact thing of, is this a good or bad looking chart? Well, it depends on your perspective. So I'll go through it a little bit quicker for you day traders or anybody, scalpers that were buying right there, or, you know, buying the dip or what they thought was a good dip, and their plan was to buy and sell within 10 minutes. Well, yes, for those people, the chart looks and is a train wreck. However, if you care about the big picture point of view, yes, big pullback here, but in all actuality, hasn't even violated, hasn't even tested that 50 period moving average. And I'm not saying this will occur, but let's say it actually drops a little further and finds some sort of support right there where that's the new low. Well, think about this from the bigger picture point of view. Previous low right here, and then the previous low down here. And if you envision each one of those as stair steps, and again, big picture wise, you'd still very clearly have stair steps progressing in the upwards direction. So like I mentioned earlier, I fully understand that if you're a day trader and you bought right there, you don't care about these stair steps, but that's why I'm trying to differentiate. So yes, today individually, very, very nasty day, big old gap and trap, but looking at multiple days as we're doing here from this angle, the trend is still in the upwards direction. Next one here, AMD, another pretty brutal day after a very nice start. I mean, check out that opening 30 minutes, just ripping and roaring, put in a little bull pennant pattern, but this is why stop losses exist, because it broke that pennant, and if you held and hoped, you got absolutely destroyed as that thing essentially went down all afternoon long. Last 30 minutes, you can see a little green candle right there. So yes, big pullback here, and you got to think that a lot of people now moving into next week going to be watching that initial area of support now potentially right down there at the 114.50 mark, which is that purple line, 50 period moving average. If that level can't quite hold up, then the next level that you got to think a lot of eyeballs going to be drawn to is the pink line right there, the 200 period moving average. You can see it's actually done a good job of acting as support a couple times already. Current value of that is at 112.70. So yes, those will be the main areas of support. If there is any sort of upwards return, I'm just going to throw this trend line in here. I think that'll be a basic trend line that a lot of people will keep an eye on moving forward. Will it come into play on Monday? Probably not, but I suppose you never know with AMD. But like I said, I think, at least in my opinion, the key dynamic right now is not necessarily breaking levels of resistance. The key dynamic is making sure this big pullback doesn't get even bigger. Next one here, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market is going to go up, this one will also go up. And again, rough afternoon, no doubt about it. Quite the big pullback here, quite the big downwards channel, whatever you want to call it. So from a nearer term point of view, those day traders, yes, not a good looking chart. But assuming you care about the bigger picture, you're going to want to ask yourself a key question. That is, well, okay, yeah, fair enough. It did have a downwards channel pretty much all day today. But what was going on before this downwards channel? And what was going on was a huge move in the upwards direction, which has now allowed me to draw a very nice bull flag pattern. As I mentioned earlier, just because something's in a bullish pattern doesn't mean for sure guaranteed it's going to go back upwards. But my point here is that assuming you care about the bigger picture point of view, everything is still perfectly fine, even with this bigger pullback, because all that's done is allowed a bull flag pattern to form. So if you were to say, Clay, summarize this very quickly, I would say bull flag pattern on the 30-minute time frame. So not just a question of can the price get continuation, get the breakout back to the upside. Early next week is going to be quite interesting. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the class next week. It'll be Thursday, July 20th at 7 p.m. Eastern time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit the like button, leave a comment. Tell me what you traded today. Tell me what you're watching next week. Or just give me a smiley face. But those two things go a long way in communicating to me that you enjoy, help out the channel, and I really do appreciate it. So if you would like for me to continue to do these top 10s, like I said, hit that like button, leave a comment below, and go get signed up for that free class. Have a great weekend.